All right, good morning. Let's go over today's trade plan. So one of the scenarios that we've been discussing over the last few sessions is this relative weakness in the other markets and how that can lead to weakness in the S&P as well. Overnight, we were using 70.5 to 72.5 as the bull bear zone. That area broke and took ES down to 65 to 67, which was the support zone below it. And then we ended up balancing within that range for a few hours. And at this point, heading into the open, short term, sellers are in control here. We've broken below the recent 2-day range, below the bull bear zone. So, short term, sellers are in control, and we want to be cautious on taking any long setups this morning. The main catalyst is the ISM non-manufacturing index at 9 a.m. Central. So below 65, the main area of support is 60 to 62, and that area can still attract responsive buyers ahead of the econ report. But again, if this is the start of a bigger liquidation type move, then we may just end up balancing below 65 and then eventually even take out 60, 62. Now if we break 60 to 62, in that case, there's really no decent support that can really attract buyers in this market until about 49 to 50 half, or even 44 to 46. Then we can actually get a liquidation type move. So we are going to be watching the internals and the volume, and we want to see a pickup in volume if we're going to get that bigger move lower down to 49 to 50 half or 44 to 46. But 60 to 62 will help us gauge that. And aside from that, as long as we hold below 65 to 67, then that sell side scenario would still be in play. And would want to see continued weakness in the other markets as well. They have been relatively weak, so that idea has been in play anyway, but we want to see that continue. And then S&P can put in a correction as well. On the upside, 70, 72 is a very key area, and holding below it would leave sellers in control. Above it, we do have 74.5 to 75.5 as initial resistance, and in the event that either off the econ reports or off the open, we somehow get a upside reversal. In the event that we break above 70 to 72, it's more likely that the market will then just balance in a range. I'm not thinking that if it reverses, we're going to get a directional move to the upside. That's a low odds scenario given the weakness in the other markets and the weakness in the overnight session. So basically, there are two main scenarios that we're working with. One is that we go down to 60, 62, and we find buyers there and we balance in a range. But if 60 to 62 goes, then the market can even go directional and liquidate down to the 49 to 51 and potentially 44 to 46. The low odds scenario, which again we still have to be prepared for, because you never know what's going to happen in the market. You can only set expectations and put a plan in place, but at the end of the day, you have to be open-minded, and especially as a day trader, you have to be open to what the market is telling you. So the low odds scenario is that we get a move back up above 72, and then it's very high odds that we'll just balance in a range, that we're not just going to shoot back up to the highs, but we'll probably just find sellers at every zone along the way, and then just kind of balance back and forth, and still see edge on the short side. So the focus this morning is on short trades, and we certainly at the very minimum want to be cautious on long setups here, just because that potential for a directional move is in play right now. Especially below 65, you'd be breaking below like a week-long balance. And, in that case, a lot of people who were expecting a retest of the highs or a push above the all-time high would be in a losing position. And, that can result in some continued selling pressure until the market reaches a point where, it seems like a bargain, or at least in the short term, it seems like it's trading far below value, and then it kind of comes back into equilibrium and starts balancing. And I think that point's either going to be 60, 62 if the market still has that strength, because the S&P has been resilient. So, if that strength is still in play, then 60, 62 is going to be a spot. But if if the liquidation scenario is in play, which again, we'll know probably following the econ release, then, it's probably going to be closer to 49.50 or 44 to 46, where we start getting some responsive buying and, some better um, pops in this market. So those are really the main ideas at the moment. We do have to break and hold below 65 to really, get the selling accelerated here. And, let's see if that scenario is going to be in play here. We do want to see, weak internals that continue to get weaker. We're opening on a 10-point gap lower, so, the AD lines are going to be weak just, by the fact that we're opening on a large gap lower. But then we want to see that weakness continue to hold. We want to see more momentum on the downside. We can get some positive ticks. That's okay because it's very, the NYC tick is a very short-term gauge of market momentum. So even in a bearish day or trend down type day, you can get positive tick readings, but you want to then see it reverse pretty quickly, and you want to see more time spent below zero. And then, again, you do want to see a pickup in volume. Right now, we're running about 75 to 80% relative volume. You want to see that rising after the open, especially after econ, if we're going to get that bigger directional push. Otherwise, just the lower volume could limit the day's range. In the other markets, in NQ, we want to see a break and hold below 45 to 50 to confirm the downside. TF is looking pretty weak at the moment, but if we break below this recent range around 1109, then the low 1100s and that 1097 to 1100 area would be in play again. So be watching the other markets as well, and then as they hit their support and S&P hits its own support, then that can provide a good spot to cover short positions and or at least take some profit on the short side. But right now sellers are in control, so that's the main focus. Let's see if they can maintain control now. That's what we're going to be looking for off the open and after ISM, and we will take it from there.